Hello, traders. I've got a stock that looks great right now, and I'll explain how I found it and why I like it. Subscribe to my channel now and turn on your notifications so that you don't miss any of these daily trades. You'll help me build my channel, and I'll help you build your account. Let's get started. We are 2.5 hours into trading. It is Tuesday, February 23rd. Hello, traders. Let's take a look at what's going on in the market. We're going to look at our positions. As most of you know, the market is down a lot overnight. We had some pretty heavy selling taking place today. So let's review our positions and then let's take a look at what the market is doing and what it is going to do. So WYNN was a position that I suggested 5 days ago. Stock is up. Let's put up the SPY because it's important for us to be able to watch relative strength. That is what we trade. I'm going to take off the major moving averages to clear the chart a little bit. You can see market down sharply. What's the stock doing? It is up. This is our cushion. This is our edge. And we use it every day. Win, nice, ABBV. Market down, stock trending higher, relative strength. We were going to be selling an out of the money bullish put spread below this technical support, keying off of the $100 strike price. Nice position. ZNGA. This stock is taking some heat. Suggested it back in here a few days ago. You can see it crested. Now it's starting to pull back. From a technical standpoint, once half of this long green candle was given up, you needed to stop yourself out yesterday. Now it's testing the breakout right here. You can see prior high, that's resistance, support, support. Should find support here. So I like it around the $11 level, but I think that you need to be very careful with this. Before you take a trade, make sure that you know what your exit point is when you know that you are wrong. At what point, where is the line in the sand where I'm expecting this stock to go higher and it has proven me wrong? Very important to know that line in the sand. If the stock closes below that support level right here, yes, I think you should close the trade down. Got a nice upward sloping trend line. You could also use that. I don't evaluate swing trades intraday. I let them do what they're going to do. And if I need to close them down, I look at them the last 5 minutes of trading and I watch those key support levels very, very closely. So ZNGA, not a good pick. It's because the market is pulling back. I expected the market to continue to move higher. And I also expected politicians to get a dang stimulus bill done way before now. And they're not doing it. I figured with Democrats controlling the White House and the Senate and House, they could get it done with or without Republicans. They seem to be more preoccupied with all sorts of other things. I hope they get that stimulus bill passed this week. For the sake of many hurting Americans, primarily, you can see that on APPS, we were going to be leaning on this breakout right here, and we were going to be selling a $70, 65 bullish put spread. You can see the stock is at $74. Yes, it fell below that level instantly, and then now it's been gaining traction. Looks like that support level is going to be holding. Stock is lower than where we initially featured it. However, market's down big. Tech stocks are getting hit hard. I like this stock. I still like that support level. BIDU. This is one that I suggested Sunday evening, and I suggested selling a bullish put spread all the way down here. And you can see we never got filled on it, unfortunately, because the stock pulled back and then bounced. Today, same thing, pulled back and then bounced. This stock wants to go higher. Baidu is incredibly strong. Let's take a look at that 5-minute chart. You can see how it's sold off and now how it's been rallying back. So I do still like Baidu. We weren't able to get filled on that, and that was only a day order. Let's take a look at yesterday's pick. HLT, Hilton. That stock is trading higher than the prior day's close. Look at that relative strength. Market down, down, down. Stock drifting a little bit lower, but still holding that opening price and still up for the day. And you can see how strong that move is. I love this horizontal breakout. Did I suggest buying calls on it? No. The market is too mushy. It's too soft. We're not getting a breakout. So I suggested selling the 115, 110 bullish put spread. We had members getting filled at $1.15. Very nice credit. That was on the March normal expiration. That's the advantage of trading relative strength. If the market throws you a curveball, these are the stocks that want to move higher. Right now, selling out of the money bullish put spreads is the way to go. However, let's be fair about all this. The second half of my presentation is going to be about some tech stocks that we sold bullish put spreads on. They were in trouble. We had to adjust. So I'm going to show you what the market's doing. Big drop on the open today. 1 OP indicator, bullish cross right here. Let's put the cross here up so you can see where that bullish cross took place. Right here. Not here. Not here. Not here. It was telling you this was going to be a bounce. Bearish cross right here. This is predictive. It is anticipatory. It is not reactive. It took me 10 years to develop this. This is all I use to trade the futures. So you had a bearish cross right here. It's telling you if you bought here, up here, you need to take gains. You need to watch out because the market looks like it's going to be going lower. Once you had this upward sloping trend line on a 5-minute basis violated right in here, you had to go short. I was short the futures briefly. I scratched the trade. I didn't want to have a futures position on with all this market volatility when I was going to be recording. Otherwise, I would be in a short position right now. And you can see how the market is drifting lower. So overall, market conditions. You can see how we had this horizontal resistance level that was broken to the upside. This is the prior high. That is now support. And that comes into play at 385.80 on SPY. We opened below that level. If we close below that critical support level, 385.80, that is the number you need to take away today. If we close below it, we are likely to test the 50-day moving average. And you can see 1, 2, 3 touches on the way up, a couple of candles that went below and then bounced right back. This is the lower trend line that I am following, not one that's connected here. The more touches you have along the way, the more it validates that upward sloping trend line. And look where the market found support, right on that trend line this morning, just above the 50-day moving average. If we close below SPY 385.80, I believe we are going to test the 50-day moving average. You can see how the upward sloping trend line and that major moving average come into play right about that same level. So let's see what happens during the course of the day. The reason the market's selling off, we have bond yields increasing. That's weighing on the market. That's weighing on tech stocks in particular, because the notion is that tech stocks will have a harder time raising capital. They'll have to pay higher interest rates in order to do that. I feel that the market is in this channel and it's simply overextended up here. It bumped its head against the ceiling enough times to where buyers were sick of bumping their head up against the ceiling, waiting for a breakout, waiting for a stimulus bill that has yet to come. And as soon as we're bumping up, well, we're not going to break out. Okay, well then short sellers get more emboldened, and those who are looking to reduce risk and take profits start doing so, and then you get a compression right here, and you get a breakdown below that compression. This is what happened yesterday. Today we had follow through selling. When I have to leg out of bullish put spreads, I do it for my swing members after hours, So the market is not open. This morning I sent out commentary to let everybody know exactly what we needed to do for these positions. Legging out is extremely difficult. You need to have the market moving your way, and you need to have the stock moving your way. So how did I know that the market was going to be soft today? Well, first of all, we were already challenging this horizontal support level yesterday, and look at that bearish hammer right there on the S&P 500. This morning, I knew that the futures were down overnight, and that was also a problem. This is a chart of a 5-minute chart of the S&P 500, and this was the close yesterday. So that's where it closed. And then the market kind of waffled around during the overnight hours, and it tried to bounce and get back some of the gains that we had yesterday. But then look what happened. Boom, boom, boom. This is very persistent selling. This is heavy selling. The market can't even come up for air. You've got all these long red candles here closing on their low. We get a little bit of a reprieve before the open. I knew that this was just a bounce and that we would see that selling pressure right in there return. So what did I have? What knowledge did I have before the market opened today? I knew that this opening bounce here was going to fail. So the market was going to be down after it opened. All right, that's a critical piece of information because market first, market first, market first. What else did I know? I'm going to take the SPY overlay off, and I'm going to put up one of our trades, Micron. On Micron, we were leaning on this technical breakout right here. And I put this trade out on a Sunday evening, and we were selling the 8250 puts on March 12th expiration, and we were long the $80 puts. So my instructions were, we're going to have, and you can see how this upward sloping trend line right here was breached, and this horizontal support level was also going to be breached on the open. And we had market weakness. That meant that we had an opportunity to exit this trade. So we were going to be buying back our 8250 puts on the open right here. And this is Micron. So market order on the open, buy the 8250 puts. I was filled at $2.47. Some members got filled at $3.05. Big disparity because there are all sorts of exchanges right now. There is payment for order flow everywhere. Who knows where Ameritrade's routing their orders? That's where I happened to send my order this morning, and it was filled at $2.47, which was pretty decent. Interactive Brokers and Tradier, I'm hearing fills over $3. So when they sell these orders, you don't know what kind of fills you're going to be getting out of these places. It's not like the old days where you had exchanges where IBM only traded on one single exchange. When you had a market order on the open back then, you were guaranteed that opening price. Not so anymore. So even with all the different exchanges that you have, all the different options exchanges, who knows where their independent bid-ask spreads are? In any event, I hate using market orders, but because I only update instructions after the close or before the opening, I had to use a market order because I couldn't risk some people getting filled and some people not getting filled at a limit price. Well, here we go. Some people are not filled on the second leg of the trade, which is the exit. I was able to buy for 247 on the 8250 puts, and I was able to sell my $80 puts for $2.47. So I legged out of the spread successfully. I bought and sold at the same price, so I got to keep my original credit of 50 cents that I put the spread on for. So for those of you who are still in this position, I still think the market's got some weakness ahead, and MU is going to be coming down. We still have some time left until expiration. So unfortunately, the bid-ask spread on this particular stock and those options was a mile wide. We had another position, AMD, problem child. This stock has been selling off, and you can see the sell-off that we've had the last few days. So relative weakness for sure, breaking major technical support levels. There's the 100-day, there's the 50-day, and I believe the 200-day, yes, is still down below here. But this was what happened yesterday. Well, once that stock broke that support level, I was leaning on that support. We were short the $85 puts that expire this Friday, February 25th, and we were long the $84 puts. So very tight $1 spread between the strike prices does actually make it easier for us to leg out of these positions because the delta on our short puts is very close to the delta on our long puts. So once we buy our short puts back, the long puts run point for point. So here you can see the big drop that AMD had. This one I was filled at $2.50 on the open and easily got filled almost instantly on the $84 put. So we were able to keep the 20-cent credit that we put that spread on for. Here are the key takeaways, and I'll use AMD as the model. You have technical breakdown in the underlying stock. You have relative weakness in the underlying stock. So we already know, yes, this stock we want to get out. The missing element to legging out of this trade is what the heck is the market going to do? We're in an 11-year bull market. We're in a 11-month bull market. You don't want to be net short this market as a swing trader. But this morning, because of what I had shown you, the overnight price action in the S&P 500 and the fact that we were going to be breaking below that critical support level at SPY 385.80 on the open, I knew that we were going to see another wave of selling after this little overnight bounce that we had. So we had the perfect ingredients for legging out. Weak market, very confident the market was going to be heading lower this morning, and we had a stock with incredible weakness. In fact, all tech stocks were very, very weak. Here's one thing that I can tell you about the market right now is I still like the market. I feel that the stimulus bill is going to get passed. I feel that inflation is overblown. The concerns are overblown. Interest rates can go a lot higher without impeding economic growth. We are still near historic lows. Jerome Powell was testifying before Congress this morning. He said, we are not going to be raising rates anytime soon. We need to see improving labor conditions. So even though the bonds have sold off dramatically and interest rates are on the rise, I'm looking at this as a selling climax. I believe they're going to bounce. I believe that stimulus bill is going to get passed, and that will be good news for the market. $1.9 trillion. Some of that money is going to find its way into the stock market. Here's the other thing that I like today is you can see this was a violent snapback rally. So you got bad gap down. Oh, negative, negative, long candles. This is a really nice, strong bounce that tells me that buyers are still there. It's going to take us probably 3 hours to test the low of the day today. And that tells me that the bid is still relatively strong and that we're not going to see a huge market decline. Now, we do need to take a look at what TLT is doing. At different times, the market has different things that it looks at. Sometimes it's credit, sometimes it's political policies like we've seen in the last 4 years, sometimes it's interest rates, sometimes it's inflation. TLT is something that you want to watch. I believe that this long-term downward sloping channel that we have right here, and I can draw the upper end of the line as well. Typically, when you get these big sell-offs like this, that is a selling climax. And it usually starts to materialize pretty soon, like maybe within a week, we should start to see a material bounce. You'll be looking for long green candles closing on their high on the TLT. You should be watching it very closely now because whatever TLT does, that's where the market's going to take its lead from right now. So if you see a couple of stacked long green candles, you can bet that we're going to be back inside this trading channel, probably rally to at least the midpoint of it, which would be 151 on the TLT. If that happens, you're going to see some of the selling pressure abate for the market. So with all of that in mind, yes, we could be in for a little bit more selling, looking for the upper end of this trading channel to hold. That 50-day moving average should hold, and I want to be looking for stocks that are performing well right now. So how do I find those? We'll go back into the 5-minute chart so that we can watch. Now, if by chance the market does continue to have a steady path lower and we take out the low of the day and we don't bounce around here, just long candles down through the low of the day, that's pretty nasty price action, and we could get right down to that 378 level very quickly, perhaps even today. It's a time to be cautious. That's why I'm adjusting my positions. I'm doing what makes sense technically. I'm not letting my emotions taint my decision making. So let's take a look at some stocks that are moving higher. I'll give you my pick of the day. And I'm going to go into one search and one search only. I'm going to look at heavy buying. Relative strength 30 is also a very good search to use. And I didn't have to go far to find the one that I like. Look at Disney holding its own at a new relative high. There you've got a bullish flag formation. There's your flagpole. There's your downward sloping trend line. Look at that candle yesterday closing on its high. Look at the stock today still holding the gains and through that resistance level. Do I need to go out and buy Disney right now? No. Well, when should I buy it, Pete? You should buy it when the coast is clear and when the market has shown you that it has found support. Right now, there's a lot of selling pressure on it. Let the selling pressure subside. Wait for multiple confirmation that support is in. If we go to the daily chart, you can see back here, we had this drop down to the upward sloping trend line and the 50-day moving average. We didn't know for sure if this support was going to hold until we had this candle right here. So we had to confirm. We had to get above the open of that red candle. We closed above it. Now we can be pretty confident that that was a short-term low and that we can get long. Well, when you get a candle like this, that would be when you want to get in on something like Disney. How else might you know? Read my pre-open market comments. I post them every day in the description area of this video. You can find a link. You can follow me on Twitter so that you know what's going on before the open every day. I do like Disney. I wouldn't buy it just yet. If I were going to trade Disney, I would look to try and sell a bullish put spread below this 184 level, probably 185 level. There'd be some good options. That is where I would look to sell an out of the money bullish put spread. Let the market come in. Hopefully the stock will come in a little bit more so that you can get a decent premium. I feel very good about that support level holding. You've got all-time resistance there. Got a gap higher there. A little bit of a check here on that breakout. Very successful. Huge strength yesterday. This is going to be a decent one. That's all I've got for you today. I hope I've taught you a little bit about legging out of spreads. For most of you, it will be better for you to close the spread as a spread. I know that what I showed you this morning seems very, very tempting, and it seems like it's so easy to do, but you could create bigger problems than you started with. And by the way, I always like to confirm that what I say is actually true. There you can see an hour before the open, 7:36 Central Time. Here are my instructions. And there are my instructions on exactly what to do with some of the trades that we have open. And here you can see the AMD, we're buying the 85 puts, wait for the fill price, place a sell order immediately at that same price. So an hour before the open, these instructions were put out there. Most of you are going to be in trouble when you try and leg out of spreads because you don't have all the ingredients in place. You don't have the perfect market conditions. You don't have the knowledge that the market's going to be selling off and that the stock is going to be selling off. And then you're stuck because the stock that you really, really liked, that you were really bullish on, you had a neutral to slightly bullish position on. And once you take off that short leg of that bullish put spread, now you are extremely bearish on that stock. So you flip-flopped. If you're going to flip-flop on a position, you better dang well know that you have good reason to do so. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.